it's
Yeah.
more likely going to go to like 20 million than it is going to go to zero. Way more likely.
It's way more likely Bitcoin goes to 20 million US than zero.
Way more likely.
Yeah.
Yes.
So we'll get there. I think 20 million is a stepping stone of getting from here to there, just because.
I think so. $20 million. Who cares? It'll go up forever. It'll probably go up pretty quickly too. That's my prediction. I think that most likely they're not going to make it to the next recession. If it's a bad artificial intelligence, would it try to?
Stocks, MicroStrategy stock. If you look here, MicroStrategy. Hello, everyone. It is me, Luke Broyles, and I'm here with Mark Harvey. Mark, thank you for joining me. Appreciate
Hi,
it.
thanks for having me.
Yeah,
Appreciate it.
yeah, this is wonderful. So we first met on Twitter. I have my Twitter account where I talk almost exclusively about Bitcoin, and you have your Twitter account where you talk about Bitcoin and other things. And I'm looking forward to talking. We'll learn more about you.
Sure.
You've been in the space a lot longer than me. So I'd love to hear more about your background. I'd love to hear your views on Bitcoin, of course, but I'd also love to hear your views on Tesla. I know that you're a big Tesla guy, Tesla bull, and stocks in general, diversification, portfolio. I'd love to talk artificial intelligence too. I don't know if you have strong views on that, but you being a Tesla bull, you probably have a lot of views on that. So those are all the things I love to talk about, and I think it'll be really interesting because people within the Bitcoin space have very different views on all of those things. And
Yeah.
anyway, it's just another perspective I'd love to hear. So
Yeah.
yeah, if you could tell me and everyone watching what a little bit your background is, just so we
Sure.
know what your perspective is.
Sure. So starting from kind of beginning of my professional career, I'm a background mechanical engineering. I graduated undergraduate with that, and I was an engineer for about 3 years. Um, I knew that wasn't for me when I was an engineer because I was really into markets and investing and trading and things like that. So I went to grad school and I got a graduate degree in business and started working a traditional finance job for a number of years after I graduated grad school. Um, so I guess my that's my professional working career. So along that time, I got interested in Tesla first. I was a Tesla bull, um, really big back in the day, like in 2013, before like anybody really even thought that the company was uh, had a chance of being successful. So I was kind of a Tesla maxi back in the day, 2013. Um, along that time, I discovered Bitcoin 2014. I invested a small amount of Bitcoin. Had no idea what I was doing at the time, but I bought a little bit of it and I just kept it and I kept DCAing, dollar cost averaging into it for a number of years. I was more of a Tesla bull at the time, so I was focused like majority of my portfolio was in Tesla um, up until more recently, actually. And yeah, yeah, I guess I could explain things more detail if you have any more questions specifically about any of those
Yeah.
things.
Yeah, no, I definitely do. My main question with Tesla is this here. Can you see my screen?
Yes, I
Yeah,
can.
okay. So for those that perhaps are not more in the finance, stock, Bitcoin space, or whatever, just for context here. So this is really here 2019, 2020, 21, and
Hmm.
here 22, 23. This is when Tesla has become
Hmm.
really in the news, where Elon Musk, this is the vast majority where his wealth has come from. This is the vast majority of Tesla's price gain. And so you said, back here in 2013,
Yeah,
so essentially Tesla stock has done a 100x. And my
yeah.
question here, given this, is how on earth did you have the conviction and patience to hold this entire time? That's like, what are we looking at there? Six?
5 years. Yeah,
Yeah, 5 years at
it's.
least, where the stock really was quite flat, even though Tesla was growing, perhaps. I mean, you could elaborate
I'll
on
tell
that
you what.
myself,
That
but how do you have that conviction, that patience? Because most people would not have that, putting money in an extremely high risk electric car
yeah,
startup when they were extremely unprofitable for half a decade in the midst of the longest bull
yeah,
run of American stocks.
yeah. So yeah, it's great to look back and reflect on that because that was a really hard time. So I got into the stock in 2013, and it had an initial spike from like, so this is pre-split, so it was like, it went from like $36 to like $200 in 2014, and it stayed at $200 until basically around 2019-ish, somewhere around there. So it was basically flat for 5 or so years. Um, so that was a great experience for me looking back on it because, well, first of all, I knew the business was growing because I knew how to read financial statements, and I saw that they were actually selling a lot of cars. Every quarter, they're selling more cars than the previous quarter. They're profitable, unlike what a lot of mainstream media would say at the time. Um, it turns out you can just lie on mainstream media. So I think a lot of people were misled by that. But if you actually like drill down to the fundamentals of the company, you can clearly see that it was a growing business and they had a great outlook. Um, so uh, where's it going with that? So yeah, that was so just analyzing the company at the time. Also, I was a car guy back in the day. Like I have a history of like building cars, like souping up cars. So I know quite a bit about like automotive engineering. And it was clear to me when I saw the Model S, the first mass production car, that it was just a better architecture for a vehicle than a traditional gas car. So the company had the product that was better than anything else. Like it was like the iPhone moment. Uh, the battery of the car is like on the floor, so the car's got a low center of gravity. It's quiet. They're very torquey, so you press the accelerator and it just goes because electric motors, they have full torque from 0 RPMs. They don't have to spool up like an engine does. Um, Basically a computer on wheels. So this the technology of the car was better. Tesla had the software engineers, and they had the ability to attract software engineers, unlike the traditional automotive companies, which they could get software engineers, but they wouldn't be the best engineers like Tesla would get. So you have talent pooling to this one company in California, better product. Uh, CEO Elon Musk, he's very controversial, but he's got a track record of winning. He doesn't really mess around when it comes to business. I mean, if most of his ventures have been successful, so I have conviction the management of the company. Um, yeah, it was just like it was a perfect alignment for me at the time. I just when you feel it, you just feel it in your bones. You just know you're right when you research something enough and you build enough conviction, you just know. Um, so I was able to hold for 5 years of no growth, all while accumulating a position. So it worked out well for me because the conviction was there. So research is important, I think. I'm sorry, I can't hear you.
I muted myself. It
Yeah.
definitely is. Conviction definitely is important, but I think myself and perhaps others wonder sometimes, is it conviction or is it a cult, you know?
Yeah.
And so how do you know? Because obviously we're all fallible, myself, you, everyone watching, we all make mistakes, we all have poor judgment. So how do you know that you have conviction in this company, for those years versus being delusional, only seeing what you want to see?
You know what? That's what makes it tough, because, at the time, back pre 2019, I'm just this guy from Ohio that went to state school. So what am I supposed to know about how to, to value a company? And I would read all these analyst reports at the time by these people that went to like Yale, like business school or some nice business school. Nothing against the business schools, but they're more credentialed than I was. And I think a lot of it comes down to you can be a smart person, but you have to have good judgment. And I think good judgment comes to a lot of things um, with investing long term. Uh, you can be a very smart person and have poor judgment. I've noticed. So I think that I see that a lot in Bitcoin too. A lot of Bitcoin maxis have. You don't have to be that smart to have good judgment about what the asset's going to do. Um, so I don't know if I just answered your question or not, but I just went on a little tangent there.
Yeah. No, I don't know if you asked my question of how do we know that we have good judgment, but I think you make a good point that judgment is just as, if not more important than intelligence. I think of 2008. I think if we're talking about the 21st century here, I think probably great financial crisis, the subprime housing crisis in 2008 is probably the first big lack of judgment, let's say, from Wall Street. Like everyone in Wall Street
Yeah.
thought that the housing market was rock solid. Everyone thought that these subprime loans would just survive forever. And even those that didn't, there were some people that didn't think it would go on forever, but they didn't care because they're making so much money. But I think the vast majority consensus, besides the people that knew and didn't care or knew and were actively shorting the market, besides those two very small groups, the vast majority of Wall Street thought everything was safe. And it's like that's the
Hmm.
first big example to me. And then the second one, I think, is probably Tesla stock. Tesla for a decade and still to this day is hated on by basically
Hmm.
all of Wall Street. And the fact that Tesla not only survived, but came through, and still Wall Street hates it so much, to me, it's just fascinating. It's like, how could
Yeah.
all these people miss it? And
But
I'm not necessarily a Tesla fanboy, but to me, it seems obvious from the beginning. For years, it seemed obvious that that yeah, there's a lot of retail, there's a lot of hype with this company, but there's also a lot of needless pessimism and just ridiculousness of so I guess to go back to that comment on judgment, what do you think they're missing when it comes to these major events? Great financial crisis being one, Tesla being perhaps the second one, and I think we both argue Bitcoin perhaps is that third one. How is it they can miss judgment on certain things, whether it's in favor of our investments, Bitcoin, Tesla, or other people's investments? How do you think Wall Street or traditional finance in general, let's say, gets into this um, self-thinking feedback loop where they just miss the forest for the trees?
I think I have a strong opinions about kind of like the analyst at Wall Street, because I would read a lot of the reports about Tesla. So I think a lot of them are they don't have the correct um, incentive structure to do a quality judgment call on something. For example, say you worked at Morgan Stanley or something like that, and you were trying to value Tesla's stock. You can't actually own the stock, and I know that they say that that'll make you biased towards the investment if you're allowed to own the thing that you're doing an analysis on, but they don't have conviction in what they're doing. So they're really just performing a job. Just I need to create a report about Tesla, put a price target on it, and then I'm going to go home at 5 o'clock. They don't have they don't have the I don't know what the word is, like the incentive to do a deep dive analysis. So if you ask me, the people that are best to ask about an investment are the bulls of the people that own that investment. So if you talk to somebody who actually owns Tesla stock about Tesla stock, they'll give you a way more deep dive conviction analysis of the company. And you could say that they're biased, but they're also betting with their own money. So they're probably going to be correct. So a lot of times, Wall Street, they don't have skin in the game. I think skin in the game is really important to making good judgment calls. Um, Wall Street, they will get bailed out anyway. So I don't think they're worried about losing their jobs. So they can
Because
do
they have
whatever.
to. Because they have to. Yeah.
Yeah, yeah. So I don't think they don't have an incentive to do a good job. Um, and it just it leads to needless crisis and misleading the public quite a bit. It's very frustrating. I tried to get a job on Wall Street back in the day, back when I was a Tesla bull, and I would I made a detailed research report about the company, and I would go to like Morgan Stanley or these big companies, and I'd say like, oh wow, like I think that I could be a stock analyst at your company, and they would just look at me like I'm insane or something like that. They don't have, but they don't have they don't have the incentive to actually do the job. So
Yeah,
yeah,
I'm pleasantly surprised you said that because and for the record, I've not heard you say that before, but that's exactly my thought too. I think the reason, not just traditional finance, banking, whatever, I think the reason humans tend to miss these things is because we don't have the incentive to consider the other side. So, like with 2008 being the example, I think the reason why so many people missed it is because everyone had the incentive to assume the housing bubble would just continue.
Yeah.
All of the rating agencies were misleading the public with the safety of these subprime loans because it was in their incentive. If they didn't continue that, their business would just go elsewhere. And
Yeah.
likewise, Wall Street had the incentive to continue saying the housing market was fine because they don't have any incentive to say anything else. Same thing with the government, same thing with every single American that bought a home with a mortgage, even without a mortgage. Literally everyone, from the
Yeah.
very top to the very bottom, was incentivized to believe one worldview. And so the other
Yeah.
worldview was, even if it wasn't guaranteed, the probability of it happening was under accounted for by a factor of 100. And I think like with Tesla here, I think it's the same thing
Yeah.
that, and with Bitcoin, that's, not to transition too far to the conversation, but that's what I tell people is that it's like, I don't know about Bitcoin. I'm not sure about this Bitcoin thing, but I am sure 100% that of the different two probabilities, either Bitcoin is global money or it's a nothing. It's
Yeah.
nothing at all, a scam, a nothing burger, a Ponzi, whatever. It's like I know this argument is being undervalued by a factor of 50, 100, 1,000, maybe even more.
Yeah.
And even if it doesn't, even if even if that's not the probability that manifests, the probability is significantly higher than what the market thinks. So anyway, that's kind of how I think, and that's how
Yeah.
I have so much conviction in just holding Bitcoin because I know that even
Yeah.
if this thing is a 1% chance that the market is just completely sleeping on it because nobody has the incentive to. Financial planners don't have the incentive for Bitcoin to win. Banks don't have the incentive for banks. Banks don't have the incentive for Bitcoin to win. Governments don't have the incentive. The media doesn't have the incentive. Most financial analysis folks don't have the incentive to win. So that's kind of how I think about it.
Mhm.
Um, what are some of those examples with Tesla? Like, why would people in the past not have the incentive to give Tesla, the company, the benefit of the doubt? And why today are people not giving Bitcoin the benefit of the doubt of actually considering it? What do you think those specific reasons are?
I think a lot of it's what you said about. Um, I think the biggest part is honestly people don't know. Um, if you think through a lot of things, which I like to do, I think through. I write about things before I like make an investment, and if you think through, like say for example, the probabilities of Bitcoin either going to zero or becoming like the world's reserve asset, the number one reserve asset. If you think through the possibilities of that, there's and you actually do an honest analysis of what you're looking at, there's almost no way to kill Bitcoin. You can for Bitcoin as an example, you can drop the price, you can affect the price on the short term. There's no way you can kill the assets, no way you can stop it. It's just built on a system of incentives. It's almost like we're working for Bitcoin. The incentives of Bitcoin are just going to ensure that the asset is just going to continually rise in price. Um, so yeah,
Why is that? Why is that? I know that, I fully agree with that,
yeah,
but could you explain why that's the case? Because I think a lot of people, like you said, they don't know. Some people are incentivized not to understand that. I think other people simply don't understand what you just said. You could give a little overview of why that risk of it going to zero is so low.
yeah. There's a fixed supply of this asset that it can only be invented once. Something you'd have to people have to take time to learn for themselves. It can only be invented one time. Um, there's there's no way to hack the system. So that's a common question. People think that there's a way to hack the system, and so uh, sorry, I'm getting off topic of your question. I'm sorry, I keep going off topic of your question. What was your exact question?
Sure.
And I'll get to that.
Yeah. I was asking first I was asking what are those reasons why people are not giving it the benefit of the doubt, and then specifically I was asking you to clarify why you were saying the two probabilities of either it goes away or
Oh
becomes
yeah,
reserve asset. Why
yeah.
why is that the case? Why is it so hard to kill as an asset?
Okay, yeah. So the benefit of the doubt part, I think the world is just long a lot of real estate and long a lot of bonds and long a lot of stocks and long a lot of investments that aren't Bitcoin. So the incentive for like the real estate holder or the bond holder is to uh, to protect their investment, not this new thing. So you have the vast, like 99.98% of the world's assets in other things that um, they'd rather not see Bitcoin to see, because that means that their bags won't pump. So um, I think that's probably the biggest reason why. It's just this unique time in history that we're in. We're just Bitcoin is super small relative to everything else. So um, the real estate maxis are way more prevalent than the Bitcoin maxis, even though we know that we're holding the superior asset. But yeah, I think that's probably the biggest reason why. I think there's a lot of like humans have like what they call like logical fallacies that they fall into, um, where they think that the past is going to be somewhat like is what the future is going to hold. So I think there's a lot of that. People just aren't humans in general just aren't equipped to deal with change, especially rapid change or a whole new thing. So I think it's a lot of it's just human nature in that way. Um, and like the humans that will aggregate to an investment early, like Tesla, or investment like if you call it an investment, Bitcoin, kind of don't are the ones that didn't fall for the logical fallacies that exist with most people. Um, so yeah. So yeah, thinking through it, there's pretty much like when I first started investing in buying Bitcoin, I would think that there's like maybe a 1% chance that this thing will succeed, and I would weight my portfolio with like 1% of Bitcoin, because like, oh, there, there's 99% chance this thing fails, but if it works, it'll work really big. You go deeper down the rabbit hole, and then you go through all the scenarios of what can stop Bitcoin. And I don't want to sound like a naive, like millennial person, but I've thought about this for a
Hey
lot of
now,
years.
hey
I
now.
thought, yeah, I've thought about it for a lot of years, and uh, there's not much that can kill it outside of some fatal software bug, which is unlikely because it's just such an audited code base, and it's very simple, unlike like an altcoin like Ethereum or something like that. It's very simple code. So I think that the chances of that are unlikely. And um, I'm not upgrading my nodes, so I'm not changing the software. Uh, so yeah, I don't know if that answers your question, but yeah, I just is there's just no, maybe a solar flare comes and knocks out the world's internet, and but in that case, I think that Bitcoin is the least of our problems anyway. You know, it's just probability. It's
Yeah,
more likely going to go to like 20 million than it is going to go to zero. Way more likely.
it's way more likely Bitcoin goes to 20 million US than zero.
Way more likely.
Yeah.
Yes.
Yeah, I would argue at least, let's say 50 times more likely, something like
Yeah.
that.
Yeah.
It's just absurd. So as much as I'd love to expand on that more, I'd love to hear more about the paradigm shifts, like you were saying, because I think ultimately, before we could talk about, oh, Bitcoin's going to millions of dollars for people to understand, I think it's perhaps more helpful for people to understand the paradigm shift. And that's another reason why I find your story with Tesla fascinating, is because like you just said a minute ago, and like I say on Twitter all the time, uh, future changes are increasingly difficult for our brains to wrap around. And the thing that I've said online is that we have less in common with the future than the past. And every iteration of time has more change than the previous one. So it only will get harder for us to keep up, which is which has trade-offs. There are beautiful things to that. There are terrifying things about that. But specifically with Tesla, I think about how, at least from my observation, not nearly as in-depth as you in their reporting and following them and everything, but I see clearly how 10 years ago Tesla was this tiny little corner. And now we're at the point where traditional automakers are already borderline capitulating into Tesla's
Mm-hmm.
business model. And in 5 years, from my amateur analysis compared to yours, it's like I don't know what these traditional automakers are going to do in 5 years. Ford, GM, Toyota, like I don't know how the money works unless they get massive stimulus. It just seems like they're going to get completely gutted in the next few years as EVs and these kind. And it's not just about, oh, EVs better or more moral than gasoline. I think that's actually overrated, but it's all the other things that Tesla's cars are doing specifically. But anyway, I'm kind of answering my own question, but I'd love to hear you talk about that, about how do these traditional technology companies, because cars are just a form of technology. These traditional technology companies that made ICE motors of cars are now being displaced by this new technology, and it's happening so fast that they can't profitably transition over, and they might just go
Yeah,
away.
yeah,
If you could elaborate that more, I'd love to hear because
yeah. So I can make a prediction for GM and Ford. Probably GM because they have the most debt. Um, 2008, GM was bailed out by the Fed. Um, and if we enter another recession, which I think we're likely to enter a recession soon, I think that most likely GM and probably Ford, especially just because they didn't accept a bailout, and because of that, they're in a worse financial position than GM. Uh, I think most likely they're going to need another bailout, which is going to be a really interesting time. Like, will the taxpayer bail out GM a second time? Because the next recession could come at like a terrible time for them because Tesla's got the Model Y, the Cybertruck, which is coming out in a few months, which I think is going to sell like bonkers. So um, a huge portion of Ford's and GM business is selling F-150s and Silverados. I think it's going to eat a lot of their business, their most profitable business, at a time that the economy is going into and hold it in a recession. So it'll be really interesting. What will happen? They're going to lose profits from them. They're going to have to drop prices to compete with the Cybertruck on their most profitable vehicles at a time the economy is going into recession, at a time when Tesla's still rapidly scaling their production. Um, I don't think the outlook is very good for those companies. They might consolidate their brands and get bought out by or consolidate into like one like company like Ford and GM or something like that. But I don't, I don't think that they have much of a chance of survival. The automotive business is so tough. When times are going good, times are going good. But since they have huge factories, they have huge operating costs to these factories. So they're really sensitive businesses, especially when you add on the debt. They're very sensitive businesses, and I think a small disruption in the economy could be like a death blow for them. So would they get bailed out again? I don't know. And I don't think they have the management to compete with Tesla either way. If they got bailed out, what are they going to do? Because Teslas drive themselves, and so they're selling these self-driving robots. Um, they've got millions of these self-driving robots on the road right now, which can be activated once they complete full self-driving. It's like a flip of a switch. All these cars will be able to drive themselves, and and the cost of transportation decreases huge, and people are more likely to take an autonomous Tesla than they are go buy a car. Because what's the point? Why would you even get a driver's license anyway if the cars just drive themselves? And
yeah,
Tesla has monopoly on all these cars, which I think they're going to have a monopoly on self-driving. It looks pretty apparent to me they're going to have a monopoly. They're going to own the market for at least 5 years.
yeah.
Google, Ford, the Cruise unit, they're nowhere close. So, uh, yeah, it's going to be a really interesting time. The only saving grace I could see for them maybe is that they license the full self-driving technology from Tesla, just like they are with the supercharging. Um, but even then, they're just selling less profitable vehicles to compete with Tesla, which they're not going to win on margins because they have to purchase this license from Tesla. So yeah, it's I wouldn't, I would never buy stock in like GM or Ford or something like that. I would probably short them if they didn't pay a dividend. So yeah, that's my prediction. I think that most likely they're not going to make it to the next recession. The business models are just too sensitive, and they'll either consolidate and or get bailed out by the Fed again, and they'll just be like maybe like a small niche companies like like I don't want to compare them like Ferrari, but like a low volume manufacturer of
Yeah.
vehicles. So yeah,
So
it's
so so you're not bullish on Ford. Do I hear that right?
no,
Yeah.
no,
Well,
I am not bullish on
yeah.
Ford.
Yeah.
Yeah,
That
I love the
that's
management.
yeah. And you know, I'm willing to say here's the amazing thing. Here's the amazing thing. I'm willing to say you're very biased because you've experienced a 10 to 100x or whatever in Tesla stock. Oh, you own a lot of Tesla stock, whatever. You've had 10 years of information bias, whatever. But you know, even if that's true, you just read these reports from traditional media saying that Tesla's the worst bet and GM and Ford are fine. And it's like it's just so clearly not. It's like
Nuts.
sure you might be
Yeah,
biased, but if they're actually claiming that these companies are on solid ground, why? Oh well, because most people don't have a desire for electric vehicles and don't use electric vehicles yet. To me, that's such a bogus belief because
yeah,
it's fundamentally in contradiction. It's fundamentally contradictory with what I was saying earlier that we have less to come with the future than the past. Oh, we should assume that these companies of the past will never be higher risk than this company in the future because people are still using the technology of the past. Will they ever
yeah,
upgrade? And to me, that's what I think that Tesla Motors has. I think that is the Achilles heel for these other companies. It's not Elon Musk. It's not the management. It's not the lack of debt. It's not the growing. Blah blah blah. The secret sauce is the technology, and all those other things are aiding of Tesla having the best tech. And to me, from my perspective, that's Tesla's slam dunk. That they have the best tech, and there is no second best. Obviously, I'm crossing my memes here, but to me, that's what it seems. You know, when Ford and GM, when they are getting now into electric vehicles, following Tesla's footsteps, what technology are they using? They're using Tesla's superchargers. They're not using
mhm,
their own. They are
yeah,
sending their own money to this competing
yeah,
company,
yeah,
and this what they're trying to grow in this market share, and they're actively feeding their competition now.
yeah,
And even if you're biased, like you're too much of a Tesla bull, it's just so clear that Wall Street is just not paying attention because they're so
yeah,
focused on the numbers and not the technology and understanding that technology begets monopolies.
yeah. Yeah, it's really at this point, it's an AI company. It's a software company. People are very confused by that. So like I don't know if you follow the robots they're building too.
Oh yeah, which ones? Yeah, the
The
Optimus.
Optimus,
Yeah,
yeah, yeah.
yeah.
That's just they're just leveraging
Here,
their
let me pull up a visual of that here.
yeah,
Hi there, really quickly. Just in case you haven't heard yet, I'm making a movie about Bitcoin, about technology, about energy, where we come from, where we're going. It's a big project. I've been working on it for a very long time now at this point, and I'm in the middle of fundraising it, as well as getting the crew and folks together that are going to make it possible. We're actually already over a third of the way there in fundraising. It means the world to me, not only that we've raised so much money, but also that so many people from all kinds of different backgrounds all over the internet have been willing to help with this project. So if you haven't yet, please consider supporting the project. You can find it both on GoFundMe and Geyser as well, depending on whether you'd rather give cash or Bitcoin. And anyone that gives 100,000 Satoshis, otherwise known as $30, will get their name in the credits. That's both as a thank you for helping make it possible, as well as hopefully a way to help other people in your family and your network understand Bitcoin by being able to send to them and say, hey, my name was in the credits. So if you'd like to get your name in the credits of however far this film will go once it's released, and also to help make it possible, it mean the world to me. We're trying to have every dollar that goes to the cost of this film to orange pill, quote unquote, one person. We're trying to orange pill 20,000 people, roughly $20,000 in cost. So if you donate $30, you're indirectly responsible, hopefully, for orange pilling 30 people, assuming I do my job good enough. So thank you for your time. Let's get back to the show.
Here we have this article calling Tesla's bot an April Fool's joke with their AI day from, let's see, 2021. So only 2 years ago, this thing was considered an April Fool's Day joke. And then this one, it says it makes 0 sense. And there are dozens of articles like this, Reddit forums saying overwhelmed or whatever. And for those that don't know, this is roughly what's changed. So in 2021, over here on the left, we have this concept that Elon Musk and the Tesla team revealed of what they wanted the bot to look like in February 2022. So what, 8 months later, or maybe a little longer, we have this development prototype that they unleashed. Again, very controversial. Tesla
Hello?
fanboyed, and the media criticized.
Hello?
Oh,
Sorry.
you still there?
Sorry, you broke out for like maybe 15 seconds.
Oh no,
The
okay.
last, yeah, last I saw you were on the second robot in the picture, the
Yeah,
second
yeah,
prototype.
yeah, exactly. Yeah, and then if we look to the one today, now it's a little cleaner, a little sleeker,
Yeah.
improvements, which might look minor on the surface, but its mobility has greatly increased since February 22. And so now people think it's a little less absurd. So
Yeah.
yeah, if you could elaborate, why is that a big deal for those that may not understand what this robot is? And I think a lot of times we tend to look at things from the outside. And so we've seen things like Boston Dynamics or other robots that have done dances or various things in the past. Why is this robot specifically that Tesla's doing, as well as the competition that are also making robots similar to this? Why is this kind of AGI robot versus, why is that different versus all the other robots that have done human-like tasks in the past? Why are these two different things that shouldn't even be compared to each other?
Yeah. Yeah. People compare this Tesla robot prototype to the Boston Dynamics, the Atlas robot that does all the backflips and all the tricks and parkour or whatever, picks up things. And people are they're mischaracterizing what Tesla's trying to do. Because the Boston Dynamics robot, which is considered like the most advanced one so far, it can do demos, it can do tricks, it has great motion, great control. But the fundamental difference is, yeah, it's pretty awesome. I love watching these videos. The fundamental difference that people don't realize that it's basically dumb. It can do things, but it's programmed to do them. So what Tesla's doing is they're taking the the uh, the full self-driving hardware, the chip that they designed for the vehicles, which they designed themselves. People don't realize that either. They have their own chip that they designed, and specifically for AI tasks that can be done without using huge amounts of energy, because running AI systems, I'm not an expert on this by any means, but it's very energy intensive. So they have a custom hardware that they're taking from the car and using in the robots, just applying it to a different application. So it's able to think. It's got a brain. So the breakthrough with Tesla's technology isn't going to be it can do backflips, it can do parkour. It's going to be that it can, I don't know, do simple tasks like, help you wash your dishes or work and do any kind of general labor tasks. So that's huge.
Yeah.
So I mean,
Yeah, yeah. Essentially, the previous robots are, we give it code instructions and it performs those extremely accurately. But these new robots, what they're doing is we're just giving them verbal commands. It's similar to the Chat GPT phenomena, let's say, where that blew everyone's minds because now you could just type in human speak instructions and it could just do it for you, compared to previous things where you actually had to encode it to do those things and then it just did it for you. So that's kind of the leap we have here. So what does that mean for the economy besides replacing dishwashers with Tesla bots?
Yeah.
What are the larger implications? But why does this matter for the global economy? It's like what use do I have for
Yeah,
robot?
exactly. Is anybody going to have a job? I don't know. Are we just all going to be Tesla shareholders and just reap the gains of that? I like, it creates a really weird possible future if this thing can do all manual labor, any general task. It would lead to a world of abundance, that's for sure. How that abundance will get distributed amongst the population is the thing that I think about, and I don't have the answer to. Some people will say we need to tax these AI companies and use the money, the proceeds to fund universal basic income or something like that. Maybe that's an option, but uh, yeah, it'll create a strange future. I mean, you know, what are humans for at that point? What are we? The software tasks on the computer tasks, stuff like with like ChatGPT is doing, the non-physical tasks are pretty obviously going to get taken away from AI. So the question in my head before this was the physical tasks, like mowing lawns and doing dishes and cleaning gutters. What's going to happen with that? So this takes care of the uh, physical tasks that will have to be done. So yeah, I mean, it's very strange to think about, and maybe it's something I'd do some more research into to think about uh, how that would play out in the future. Because I don't know, but the only way I see it immediately playing out is I would buy Tesla stock and maybe Microsoft or something like that, but probably Tesla because I think Tesla's farther ahead than people think. Um, um, become a shareholder if possible. I know it's not possible for every person in the world to do that, especially not Americans. Um, but yeah, it could be a strange future. It could be very strange. So, um, a signal for me is going to be when the cars can actually drive themselves. Once the cars drive themselves, I'll probably be sufficiently freaked out. Like when they can drive themselves without a human and like almost no um, uh, uh, human intervention, uh, that'll be a huge milestone because I think people get Tesla wrong because um, they're using like ChatGPT makes mistakes all the time, but there's no people that get killed when ChatGPT makes a mistake. But
Yes.
Tesla has to be super controlled and deliberate with their software updates for their cars to make them drive better because it can actually kill people. It has to be safe. So I think Tesla's way farther along than people think they are. They're just limited to a product roadmap where they can ensure that the cars aren't running people over. Um, I think they're very far, way more far ahead than people realize, and I think it'll become really apparent when they're actually driving themselves. And I think that'll happen more suddenly than people think. I know it's taken longer than even I thought, but the roadmap is still there. And if it happened in 2025, that's still pretty soon. Yeah,
You've touched on so many things that each on their own are worth going an hour into. But yeah, I think one of those things that's important to emphasize is that these are all exponential trends. They're inherently exponential trends. And fundamentally, with an exponential trend, it's very difficult for us to predict because if a line is inflected a little higher or a little lower, that changes the end destination by years, if not
yeah,
decades. And so that Elon Musk has become quite infamous for like, oh, next year, next year, next year. And it's always harder than I thought, always harder than I thought. And I think it's because, he's probably a eternal optimist. I think he kind of
yeah,
has to be in order to doing the things he has, and in
yeah,
the face of risks that he's had before, financially speaking, I think he has to be biased towards optimism. So that's my guess. But to your point, even if this isn't anytime soon, even if this is 5 years away, 10 years away, that is still significantly faster than I think
yeah,
society would be able to adjust. And there's
yeah,
always a question, what if it's next year? Because you made such a good point that people don't think about is that with chat GTP and other forms of AI, there's no negative consequence if it's wrong. But with Tesla, for them to roll it out, they have that personal incentive, but also for the government and other agencies to approve that use on the road. Really, the stuff that isn't an approval is probably so much farther ahead than what we can conceive of. Just like
yeah,
you're saying
yeah,
here, and then for the robots, that's not the case. There isn't that kind of similar thing there. So if we could just so like this, for example, 2 years ago this robot didn't exist, and now here it is walking around, whole bunch of them.
Yeah.
At the last meetup at the last reveal in February of 2022, it couldn't stand up straight. and
Yeah.
now they have it doing this just a couple years later. Again, this being completely different than the other forms of robots that we've looked at in the past before. And so then my question being similar to what you're saying is that even if this takes a very long time by our human standards of, let's say, 10 years, 15 years, 20 years, that's still a really rapid time when we're looking at the longer scale of history. And
Yeah.
how are we going to adapt our jobs? How are we going to adapt our livelihoods to that? And then here's the one I think about, and I'd love to hear your thoughts on this. This is a question I have too. But how many of these things could there be? Like, what happens when these robots start building themselves? Because we
Yeah.
asked to, because it's more efficient. It's like, oh, we won't be able to build enough. It's like, well, robots build themselves, and we see that on the software level of AI, artificial intelligence, making more artificial intelligences that are more intelligent than itself, and we don't really know how it's doing that. It just is. It's kind of like the analog version of that, where we build the robot that can build itself, and I don't have the answers to that, but it seems that this could be dramatically faster than we can comprehend. And even if we just give this, let's say, 5, 10 generations, and they're able to do that cheaper and cheaper indefinitely, I mean, what does that mean? Well,
Yeah.
to me, this is like a horse and automobile moment, that for thousands of years, the horse has been economically viable. And now we sitting here today can actually look and tangibly see potential signs of humans becoming less economically viable. Not that we would
Yeah.
be.
Yeah. What do we do? We're just gonna all
Yeah,
become artists, or
whether that's 2 years away or 20 years away from starting, and then obviously it takes decades after that to be fully implemented and fully expand. But to me, it just seems obvious. It's just economic incentive.
yeah.
But yeah,
Yeah. Yeah. It's going in a strange direction. And uh yeah, how many of the Tesla robots will there be? There could, maybe every person on the planet will want one. Maybe there'll be 8 billion of them, or maybe there could be one for every 10, or one for every 10 people, or maybe 10 for every one person. Either way, it's a bit, any way you think about it, it's probably a big number.
yeah,
And yeah, it's human labor. How much human labor is there, and that we don't want to do?
yeah,
So
quite a
yeah.
bit. So then bringing it back to Bitcoin, this is scary for a lot of people. It's intimidating for a lot of people. And I have my views on this. And I guess I'll say mine, that I'd love to hear yours, because it's probably similar, but perhaps it differs a bit. The way I would put it is that technology is innovation. Technology is a force that makes things cheaper over time. It forces prices down. This is deflation. We are able to harness, move, produce, and consume more energy for a lower and lower energy cost. So, like this robot is an example, whether we're talking about the Tesla bot, or we're talking about the Tesla car that can drive itself, or even if we're just talking, so your Tesla bot, how big of a deal that is. Then you have the Tesla car that drives itself, and then you have the EV, electric vehicle kind of thing, which even that is still early. Even that's
Yeah.
going to take years, if
Yeah.
not decades. Even that's a big deal, but it's all the same thing, that we're able to drive further distances for cheaper. We don't have to pay for the labor, and then not just the cars labor, but everything else. And so if things are becoming cheaper, to me, then this problem becomes, as you alluded to earlier, the single greatest problem in this world transitioning towards hyperabundance is, how do you preserve your purchasing power? Because you can't own stuff. Why would you preserve your purchasing power in a luxury car when every 5 years that car becomes irrelevant, and then every 3 years that car becomes irrelevant? Or let's say tech monopolies as a whole, and perhaps the Tesla bulls will hate me for this, but Tesla Motors seems to be this emerging monopoly of, at least, let's say, the first half of the 21st century, similar to Standard Oil of the past, similar to, let's say, Amazon or Apple right now, or let's say the Dutch East India Company when spices were the global monopoly. It's like each technological paradigm has its monopoly or its set of monopolies. And it seems to me eventually, Tesla probably won't last forever. There'll probably be a new monopoly or a new whatever. I mean, Ford and GM, those were once monopolies, and now it's not absurd to talk about them going under. So
Yeah.
to me, that becomes the basic question. If we live in a world away from fiat distortion, where house prices actually go down, where gold actually goes down because we just make more supply at a faster rate, where the forces of deflation, the forces of innovation and human ingenuity, creating AI for AI ingenuity, just have this collapse in prices faster and faster. What do people do? Because you can't work, your labor is no longer economically viable. You can't hold assets because they're not economically viable. And perhaps the securities are better, but still those companies that you're holding securities in, you're constantly buying monopolies at the top and then holding them down as new monopolies come up at a faster and faster rate. I mean, obviously I think Bitcoin's the answer to that, but what do you think?
Yeah, I've got two views. I've got two views on the future outcome of this. But I agree with you. Owning a company is probably not the solution to business because businesses are just always trying to kill each other.
Yeah.
So they don't last forever. Um, so the thought is Bitcoin in a hypothetical post hyper Bitcoinized world would be kind of like a proxy for human productivity growth. And so like in the limit, like the purchasing power of Bitcoin would appreciate at a roughly the same rate that humans were able to increase productive output of our economies with like artificial intelligence. So that'd probably be very fast. Purchasing power of Bitcoin would go up as the price of goods goes down. I would have this. I've been wrestling back and forth in my head about another scenario with artificial general intelligence. If it's not, so that scenario is if it's a benign artificial general intelligence. But I'll let you know what you think about this. But if it is like if it is an if it's a bad artificial intelligence, would it try to create its own money that it forces us something that it can control, something that something else can control? Would it somehow trick us humans into using this this asset that it created and that becomes the global money just because it wants to rule everything, it wants control. So the only way it can control is if it controls our assets. I think about this a lot. I'm not saying this is the probability, but I'm saying what if that is an attack scenario from the AIs? You think it's possible?
Sure it is. I mean, I get hate online. One of the things I say online is that nuclear weapons should not be our concern. It's what are the weapons we'll make next? And people online hate me for that because they think that, oh, you don't care about the threat of nuclear war. You don't understand how bad nuclear war will be. And it's like, no, I understand, blah, blah, blah. But it's these kinds of questions of things that don't exist yet that I think should be viewed as a larger concern. It's the unknown unknown of what if we create an AI that, because nuclear button is scary, but nuclear war is why people think wouldn't kill everyone. But what if you can make a super virus or a super virus designed by an artificial intelligence or a super virus and a nanotechnology with it's like we simply don't know where these things are. So yeah, I think that kind of rogue thing is possible, and I think it doesn't even have to be malicious. We just have to, if we're giving these robots, if we're giving these AIs human commands, well, humans have nuance. Every single word, every tone, every inflection of our voice, we have certain nuance that we're giving it. And so this is the whole paperclip idea. What if we tell a robot to make as many paper clips or an AI to make as many paper clips as it can? And because it doesn't understand nuance, whatever, it just starts destroying the whole world and turn it into one giant, sea of paper clips. I mean, that's obviously well, for those that are in the AI technology space, that's a more infamous example that's oversimplified. But the point rings true. What if we tell it to do something, and because it doesn't understand what we really want, we don't really want as many paper clips as possible. We want as many paper clips as will suit us for today. The more so. Anyway, point being, with your money, it's like I think it's possible. I think, but here's the thing. Let's say AI comes after Bitcoin because they want to take over the world's money and humanity. It's like, but I think the odds of it taking over everything else is anywhere from 10 to 100 times more likely. It's like, what if, like, sure, maybe AI figures out a way somehow to destroy Bitcoin, which I think is very difficult because of work, difficulty adjustment, everything else like that. Like, Bitcoin is designed both as software, but also having an analog counterpart that no matter how much ingenuity or how much energy or how much intelligence is thrown at it, it can't be changed, which that is a feature, not a bug, because it's designed that way to prevent, no matter who the smartest person in the world is, or what the smartest computer in the world is, that nobody can change it. It's not based on intelligence. You don't get Bitcoin based on intelligence. You get based on energy. And so comparing that to everything else, yeah, I think you're right. I think AI could maybe find a way to attack Bitcoin, and that's not because I could think of a way it could. It's just that if it's a million times smarter than me, or even 1,000 times smarter than me, or 10 trillion times smarter than me, we really don't know.
Yeah.
Then yeah, it's more probable to figure out a weakness in Bitcoin than I am. But what about cash? What about US dollars? What about political currency units? What about gold? What about copper? What, like everything else in the world? Like I can think of a way that AI could manipulate it. I can't think of a way AI can manipulate Bitcoin. And that alone tells me it's orders of magnitude more likely that if AI wanted to have everyone be on the same monetary standard so that they can harvest anyone's money, that it would be something else. It would advocate more CBDC or gold or whatever, because it could produce those things much faster. And then that's the more pessimistic view. What if AI wants to manipulate and destroy everything? A malicious or destructive AI. But even if it's a benign AI, it's like, let's say this whole artificial intelligence humanoid robot thing is true, and in say 30 years, there's a mere 20 million humanoid robots like the Tesla bot, and let's say a billion software AIs, which that's probably not unreasonable. I don't know, maybe we should do the math on that. But like tens of millions of those bots, hundreds of millions, maybe even billions, maybe more of those AI bots, is like how the people that run these businesses that use these technologies, how will they accept money? Like an AI can't accept gold. An AI is not going to take 1/100th of your house, and perhaps not even a paper fractional reserve of 1/100th of your house. Because what's the AI going to learn? The AI is going to learn you can't trust humans. Shocker.
Yeah.
It's like the AI will accept Bitcoin as payments. So anyway, I'm going on here, but my point being that when it comes to viewing the downside, what's the most probable thing AI is going to destroy if it wanted to destroy? It'd be anything besides Bitcoin. And then likewise, from the positive perspective, if AI is going to want one form of money or everything else, what's going to want? Bitcoin. For the exact same reason that it's the hardest to destroy Bitcoin. Even if it's not impossible to destroy, it's orders of magnitude more difficult. So that's my view.
Yeah, I agree with that largely. And a lot of over the years, people have tried to go over scenarios with me of how Bitcoin can be destroyed, and they'll bring up quantum computing. And I would always tell them that too. I'd say, well, it's more likely your money in Bank of America is at risk from quantum computing than the Bitcoin blockchain. So yeah, I think I agree. I think they would go after the low hanging fruits first. Every business in the world, all assets. Yeah, that's true. I agree with that. Yeah, it's interesting to hear your perspective.
Well, I mean, yeah, it's like what do I know? I'm not smarter than the AI. I'm just trying to think within my finite skull
Yeah,
here, with what little life experience I have. Like, okay, what makes the most sense here? And to me that's just what makes the most sense. That we are in this ancient paradigm where we have scarcity and we create infinite money. And so when there's infinite money, we can't save in that money. And so we have to save in finite assets, real estate, gold, whatever, equities of cash flowing businesses. But as we continue this transition to a world where we can only make more stuff perpetually, it's like, what can you save it? You can't save in the cash. You can't save in the technology. Here's something I want to hear your thought too. Well, anyway, I'll finish my point first, being that the only answer to that is a form of finite money. That's the only answer to that. And Bitcoin is the only finite commodity in the world. The only, there are other scarce commodities, but Bitcoin's the only finite one. So, okay, here's my question though. So we've talked about a lot already, but let's open up a whole nother can of worms about inflation. Inflation, I would argue, inflation is when the government creates new currency, and the government creates new currency to prevent credit from unwinding. Like I'm in a house right now. Houses have mortgages on them. All these assets have debt on them. And as we transition from a world of scarcity to hyperabundance, the debt and relative value to these assets will just skyrocket. You know, if your house is worth 100 grand, the debt is worth, let's say, 100 grand for the sake of example. And if deflation is forcing the house price down because we can make more houses, we can mine more gold, we have more labor, both in form of human and non-human labor, the real cost is going down. The relative value of the debt is higher.
Yeah.
Everything becomes underwater,
Yeah.
and so the government has to create more currency units to prop the price of the house up. And I would argue you're already seeing this, you know, and we have seen this for decades. But my question is, in the face of these asset prices being deflated faster and faster and faster with this digitization of everything and AI and everything else, how fast are they gonna have to print? And like I think inflation is going to be bad because we have government spending 30 trillion debt. That's a problem. Then we have 190 trillion dollars of unfunded liabilities in the United States. Yeah, that's a big problem. Social Security, big problem. Aging population, big problem. Bond market and yields being suppressed for 40 years. Those are all big problems. But I think perhaps the strongest argument for excessive inflation, unlike we ever seen in the past, is this nature of technological deflation. Because the faster deflation occurs, the more inflation
Yeah.
has to counteract that to prevent a credit unwind. And if you give humans the ability to be in charge of delaying the credit unwind, we'll press that button every single time.
Yeah.
So, like,
They get
how do you quantify that? How do you explain that to people? Do you think that's true, or is that insane? Are we?
I think I think it's completely true. So we have two problems there: just the debt in general, and then the deflationary nature of technology. Um, yeah, there's just too many liabilities and just not enough dollars. Just they're bound to print to pay liabilities. That's a given. The how the timeline of how artificial intelligence and things like that, the Tesla robot or whatever, um, have an influence on the economy and actually are able to contribute to GDP growth is the huge wild card there. Because say if nothing changed technology wise, we have huge problems um, just with the overall debt load. Um, it's got to unwind, and then you add the deflationary nature of technology on top of that. So I guess the only way that that problem can be solved is with good policy making, which I don't have much faith in. Uh, the
But
people that are
is that even a solution, or is it just delay it? I think it just delays it. I don't think the math works out.
uh, if you can enable the AGIs or the robots to pay down our debt with productivity, that's the only that'll take a long time because there's so much debt, but um, that could be a saving grace. But I don't see it. I don't see things like that contributing to the economy in a meaningful way for maybe 10 years, 15 years or something like that.
Yeah,
15 years before we have a
yeah,
Tesla robot building a house.
yeah, and I'm talking more in general too. I want to make that clear that I'm not talking specifically about Tesla's bots, but using that as an example, that
Yeah,
one
just
innovation as an example of the 1,000 innovations going on. So that may be 15, 20 years away, but there are other equally significant innovations perhaps coming in the next couple of years. Anyway,
yeah, 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 yeah. And I think it comes down to good policy making because how you're able to harness that increased productivity that's had with technologies would make a difference. Um, like, are you able to increase tax revenues to pay down the debt significantly? If we're able to do that, then I guess that there's a way to help the problem. So and also they have to pay down the debt pretty significantly because, like you said, the way that the Fed and the Treasury really work is they need debt to keep the whole thing going because they don't want deflation. So yeah, yeah, it's something to keep an eye on. I personally have the opinion that it's going to be a lot of monetary inflation. I don't know about assets, or sorry, about like goods inflation, the price of your TV or whatever, but I think there's going to be huge amounts of monetary inflation. It just has to be. They just have to print
yeah.
more units of currency, which will probably will definitely manifest itself in asset price inflation over like the coming decades. Scarce assets benefiting the most. Yeah, that's probably, yeah, they're gonna have to print a lot of money. I don't see any way around it. Yeah, I actually I spent a lot of time thinking about that recently when I was writing that article. Um, yeah, it like all paths lead to money printing, basically.
Yeah. Yeah, I don't see which way, and it doesn't. Like if like okay, let's take, again, let's take the optimist and the pessimist. Optimist says, yeah, in 5 years we'll have major developments, in 15 years even more developments. It's like, okay, so deflation of real prices, we can't allow that for credit markets, so we have to keep inflating. Okay, let's take the pessimist. Oh, well, there will be a big recession, new Great Depression, whatever. I mean, it's still bad for credit markets. We still have to bail them out. We still have to print. I mean, to me, like I look at that, and like we were talking about judgment earlier, and it's like, okay, surely there has to be a third way, but I can't think of a third way. And then I think about it,
Yeah,
it's like, oh, well, of course there can't be a third way, because when you distort money and you create out of thin air, you break, law of conservation of energy to do that. You distort everything. It's like, well, of course, if it's a distortion, there is no fix. If you're caught in, if you're caught in a mistruth, either you continue the mistruth or you tell the truth. And
yeah,
I don't know, I don't know the third way. And so it seems to me that either the delusion goes on and it gets larger, and the room to fall gets larger, or it just goes ahead and falls. And thinking back to 2008, I didn't remember it. I lived through it, but I'm not young. I'm not old enough that I remember living it. But that is the pain of deflation. For those few months in late 2008, 2009, house prices were coming down, stocks are coming down. Like the market was healing, the market was reverting back to deflation forever, as it should have been. And it was so painful because we had told ourselves that, it's like a drug. We are caught on the drug of money printing and pretending like prices go up forever. But as soon as we face our withdrawal from stopping the drug, because the Federal Reserve is trying to be conservative or whatever, we just have to go back to it. And now everything's so much more expensive than it
yeah,
was 2008, even though some things like TVs, smartphones, whatever, have gotten so much cheaper. And
yeah.
it's so
It,
I guess my larger point being there is like it's hard to believe it's that simple, but we've already been living through it. It's just that it's getting more and more obvious, and to me it just seems it's only
yeah.
going to grow and become even more obvious for the next 5, 10 years.
I think one thing I think about a lot, and I don't think many people, no, not many people talk about this, but I'm kind of obsessed with it, is quantitative easing, introduced in 2008 as the fix. So they never let the deleveraging play out in 2008. It
Oh,
never finished. So the leverage just got higher after 2008 because of quantitative easing. It it wouldn't have enabled the stock market to rally like it did for the past 15 years. Um, it's all quantitative easing and 0% interest rates also. But in my opinion, that like how long that goes on, I don't know, but you just know that it's not going to end well. It's just insane to think about that. Like creating money out of thin air, buying our own debt with money that we print out of thin air. Like, I mean, it's just if you just think through it, it's not going to. That's not a good idea long term. Sure, there's a short term fix. It makes the stock market go up. It makes house prices go up, but like obviously that's not going to end well. So how long the can gets kicked, like I wish I could tell you. In my opinion, it's probably sooner than later, like maybe 5 years ish. But who knows? Maybe we'll be like Japan and just keep it going for uh, however long they've been doing yield curve control. I think since like 2010 or something like that. But
how do you think
yeah,
they've been
it's
able to do it? I have my own theory why they've been able to do it, but what's your thought?
um, I think that they're in a different situation as us. So I'm not an expert on this, but we're like we're just we import all our what's
No.
we're we're like a net importer and they're a net exporter. They
Yeah,
produce things.
that's
So
my thought too. Yeah.
yeah, yeah. So that gives them like the leeway to do that. So yeah, we don't have, that's true. Like, yeah, so can we even do with Japan? Maybe not. We don't have the exports for it. Um, the balance of payments is just not there.
Well,
So yeah,
could I add one thing to that? I, I
yeah,
think I think what people forget about Japan is that Japan, you know, at end of World War II is nothing like it is today. It has modernized so quickly. It's I mean, China has modernized really quickly, but Japan, in some ways, even more so. Their population is big, obviously, but they have modernized super fast, and so they've managed to keep their, let's say, Ponzi, for lack of a better term, alive longer. I think because that net gain via that deflation and via that technology and via that innovation has offset that. So yeah, they've managed to stay flat and survive and tread water for decades, but it's like, but they had all that exponential gains and none of that's being reflected because
yeah,
they've had to waste it all at just keeping flat to
yeah,
prevent the unwind. And so then I think about the rest of the world. It's like, that innovation is coming, but the problem is that instead of that innovation in one spot, Japan versus the rest of the world, it's like it's the whole anyway. But yeah, I think that's something people forget, and they're using the short term, even though a couple of decades doesn't seem like a short term. It's like if you look at the long term, yeah, to me it's a short
yeah,
term exception at one short term place, and yet these Nobel Prize winning Wall Street guys and economists, like we've been saying earlier, will use that as their baseline of judgment. They ignore the dozens of examples where the same policies didn't work in places that
yeah,
didn't have that unique exception.
yeah, yeah. So yeah, I hope we don't follow the Japanese model, but who knows? Or attempt to follow the Japanese
Yeah.
model anyway. Well, I don't think we'd be successful at it. So yeah, really interesting to think about.
Yeah. Well, I'd love to hear your thoughts on Tesla stock versus Bitcoin as far as allocations and how many hours does it take for an individual to understand Bitcoin? 10, 100, 1,000, more than 1,000. It takes a long time. And perhaps a single individual can never fully understand Bitcoin, but if there was a single resource to help a person better understand Bitcoin in a condensed format, for them, perhaps Bitcoin Evangelism, the book Bitcoin Evangelism, could be a good resource for them. The author is Brian DeMint. He's a friend of mine. I met him recently in Miami in person. We had been friends before that. And he sent me his book. I started reading it, and I'm glad to say that he is sponsoring today's episode. And so, to give you a brief word about his book and what makes it unique, is simply that most Bitcoin books are focused on Bitcoin and the merits for Bitcoin, but very few books venture out where other Bitcoin books dare not go and give readers a comprehensive understanding of the crypto market as well. See, Brian, the author of this book, was a former executive of a crypto project, and now obviously he's Bitcoin only, but he's able to give that perspective for people. And so it could fully flesh out for individuals why Bitcoin stands alone and why there is no second best. And so whether it's for you and trying to strengthen your own arguments against unregistered crypto securities or NFTs or whatever else you intend to not like, or perhaps you want to forward it to other people that you know that perhaps are caught up in that world and help explain to them why Bitcoin alone is unique compared to all these other things and orange pilling them. So whether it's for yourself and strengthening your own arguments, or for it's helping other people understand the merits of a Bitcoin only thesis, Bitcoin Evangelism could be a great read for you and for them. And so in sharpening arguments for Bitcoin and helping you tailor the Bitcoin message to your no coiner friends in terms they can understand, which is very important, it makes a compelling case. Like I said, I've started reading it. It's pretty good. And so if you want to support me, if you want to enjoy a moral and articulate explanation of Bitcoin, Brian DeMitt's book, Bitcoin Evangelism, could be a good place for you.
I'd like to take a brief moment and talk about the Bitcoin social layer because today's sponsor of this podcast is the Orange Pill app. And the Orange Pill app is advancing and building that Bitcoin social layer as I speak here. In fact, I'm on the Orange Pill app. I joined it a couple months ago, and there are other Bitcoiners and plebs on there too. People like Safety and a Moose, Natalie Brunell, Nate Savenholm, Daniel Prince, BTC Sessions, and other Bitcoiners and plebs are on there too and joining all the time. And so the social layer is really important because while online connections are essential and they're needed and a critical piece of bringing Bitcoin mass adoption, in real life connections are only going to become more and more important into the future and a larger catalyst for being Bitcoin's circular economy and for Bitcoin's adoption. And so with the Orange Pill app, you can find Bitcoiners near you so that you can make those in-person Bitcoin connections and those Bitcoin friends. And one of the cool features is that you don't just find people near you, but also you can find Bitcoiners when you travel somewhere. So like recently, for example, I went to Boston and now I'm going to Miami here soon. And I'm glad to say that I've met Bitcoiners through the Orange Pill app directly and also indirectly through people I met through the Orange Pill app. So it's been something that's been useful to me personally. And so if you're going to be on the road too, you might be able to find Bitcoiners from where you're headed even before you get there. So, and additionally, Orange Pill app not only gives you people to meet, but it's also the world's largest repository for Bitcoin only events. So you might be able to find cool places to hang out and not just Bitcoiners alone. So we all know that social networks and network effects have value. And so everyone that is joining the Orange Pill app makes it only stronger and stronger into the future. So I would consider joining the Orange Pill app today and get one step closer to mass adoption and expanding your Bitcoin network. So Orange Pill app is available on Android, iOS. For your consideration, appreciate your time. Let's get back to the show.
You are a Tesla bull. You've owned Tesla. You are a Bitcoin bull. You own Bitcoin. What would you say, comparing the two, what do you say the bull case, what would you say the optimistic case for Tesla, the company, and therefore the stock is? And likewise, what is the case for Bitcoin and its performance in relation to everything else into the future? And is there anything else that you're really passionate about too? But I think from talking with you, Tesla and Bitcoin are the most two. But yeah, if you could compare those two best case, worst case scenarios, what that would look like.
Yeah, so the comparing the two, uh, Tesla has a huge. So I don't have any numbers in front of me, so I'm just gonna just like kind of make some rough estimates or some rough guesses. But the if you just think about the markets, the different verticals that Tesla's in, it's like 6 companies in one or something like that. So they got the car business, just the hardware, the cars that they sell. So what's the total addressable market of that? There's like 2 billion cars in the world. So then maybe they'll capture like 30 or 40% of cars. So that right there is huge. Just in my opinion, the transition to EVs is inevitable. It's just a better, especially the way the Tesla constructs them. It's just a better architecture for a vehicle. So in my mind, it's inevitable that all cars are going to become electric. Tesla's going to capture 30-40% of that market just because they got such a large lead. So that's one. That's a lot. Maybe 30-40% of 2 billion cars. Then they have semi trucks too. On top of that, Tesla energy, the batteries and the solar, huge market. I don't have any numbers in front of me right now, but you can just imagine how much energy does the world use. Are we going to need to transition to sustainable energy? In my opinion, again, yes, that's inevitable, because if it's not sustainable, it's unsustainable. So why would we not transition to sustainable energy? I think it'll be cheaper than oil too, and coal. So huge market there. So you've got, what do we have there? This 2 cars, energy. Then you've got well, on top of cars is the full self-driving, the car enabled by the car's software hardware. So what's the value of all the time and all of the humans that are used to control vehicles, to drive vehicles? It's a lot. Everybody drives a vehicle. Everybody needs transportation. So yeah, where's it going? So they're going to capture probably a monopoly share of the transportation market in general, moving goods around, goods and people around. That's another huge market. Like, how much is Uber worth? How much are all the taxi cabs worth? How much are all of the drivers paid? So that's huge. That's probably enough right there to 10x the stock from where it is right now. On top of that, I might be missing something because there's so many. I'm just going off the top of my head, and I don't think about it as much anymore. But you have the robots, which are like, who knows? But that's insane, because how much value is there in human labor? A lot. And how many can they potentially sell? A lot. So, so Tesla stock probably has the biggest total addressable market and the best product roadmap of any company that trades. I can't think of a company that's better. I mean, you might say something like NVIDIA. That's exciting. They make uh, the hardware that powers a lot of AI and things like that. But I don't think that that's as large as the total size of all the markets that Tesla's going to capture.
Yeah.
So I'm super bullish on Tesla still. So maybe if I had to guess, maybe 20x from, it's like a $600 billion company now. So I mean, we're talking future dollars, but maybe a 20x from here or something like that in the long run. I don't know. It's because it's already a pretty large company.
Yeah.
That's great, but so a reason why I'm so excited about Bitcoin, we still hold Tesla, but the reason I'm so excited about Bitcoin is because it's the total transfer market's even bigger than that. So you've got so just understanding the properties of Bitcoin as being just a better fundamental property for a human to hold, and it's accessible to every human on Earth. So every human, or I should say, there's every human has assets allocated in some manner. So, and they don't want to lose their purchasing power. So there's real estate, there's stocks, there's gold, there's equities, there's bonds, cars or whatever collectible things. If you add it up, there's like 800 to like $900 trillion of just stuff, of just assets that people hold. So it's unreasonable to assume that Bitcoin is going to capture all of it. But say if it so just knowing that Bitcoin is has properties that make it a better asset than everything else, is likely to capture at least some of those, some of that, the value captured in those assets. So just I need to calculate, but I can just rough guess some things. So like gold is like what,
10 trillion.
$10 trillion or something like that, and Bitcoin's maybe 500 billion, probably more than that now, but let's just say five. Yeah.
And gold should probably be more like 140, 150 trillion because it's been suppressed by the papers market over the last 30 years.
True.
Even if it's only a third that of, let's say, 30 trillion, that's still 3 times higher than what it is today.
Yeah. And say Bitcoin went to the price of gold, say it went to $10 trillion market cap. That's from just roughly 500 billion where it is today. That's 20x right there. And that's just like tip of the iceberg. And then when you add on things like real estate, which is a much larger market, I think like 300 trillion or something like that. Say Bitcoin captures 30% of that market. Just how many people do you know that just own a second house because they or maybe they're older and they want to like diversify their portfolio and not lose their purchasing power, and they'll buy like a second house or a real estate, a rental property, just as an investment, not to live in it. So that's the potential for Bitcoin right there, and so that's huge. And then on top of that, the same thing with equities. Everybody, when they have extra money, they say, what am I going to do with it? I'm going to put it in the stock market. I'm going to invest in the stock market. It's just a store. They use it as a store of value, all these assets. And let me actually just pull it up. I have I wrote it out.
Yeah. Can I add something to that when you pull it up?
Yeah.
I think of everything in technological paradigms. So when I think of Tesla stock, and I'm bullish on the company too. I'm not necessarily bullish on the stock, but I'm bullish on the company. Well, it again depends what frame of reference we're looking at, but it's like I think about electric vehicles. I agree with you. Eventually, we will transition to electric vehicles, and it's not because of some green movement necessarily. It's simply that irregardless of your views on climate change, it's like we will eventually run out of fossil fuels. Someday, 1,000 years from now, 10 years from now, both of those are probably too extreme, one way or the other. But it's like we will eventually upgrade to that. Number one, because we're out of fossil fuels, but number two, because it'll eventually be cheaper. And then number three, because it's also simpler. Like anyone you talk to, even if they hate Elon Musk's guts, they love driving a Tesla. They're like, oh, it doesn't even feel like a, no, it's just those three reasons alone, EVs seem inevitable, number one. And then number two, EVs seem to be a bigger deal than internal combustion engine cars. Like you said, there's 2 billion cars today, but there's 5 billion adults today. And in a couple of decades, there'll be more like 7 billion adults. So it's like, wow, EVs alone are, whatever percentage of all cars. And it's like driving other EVs by GM or for, whatever companies that make EV. It's like they're not even comparable. So it's like, what if the EV market that Tesla's coming after and is perhaps 5 to 8, 10 years ahead of everyone else, if not longer, like, what if they monopolize that market that's so much bigger than what we can comprehend? Because it's not just about taking a small market share of the EV market share of the 2 billion cars, but what if we're talking more like 4 billion cars or 5 billion cars? So that's the EVs. And then you're talking about the autonomous driving. And then the autonomous driving with the humanoid robots, you have that component as well. Then you have the Cybertruck and the semi. You have that, and then you have energy. It's like in ranking these, it's like I laid out the case for the EV. It's like the EV's down here, then you have the robotaxi, then you have, let's say, perhaps the trucks and the energy or whatever, or maybe energy is even bigger than the humanoid robot. I mean, it's like at that point, it's just absurd because you're saying like this is 10 times bigger than this, and this is 20 times bigger than that. And even if Tesla doesn't become the monopoly of all of those, it's simply that if they become a monopoly in one of those, it makes all the others more probable. If they become the monopoly in autonomous driving, it's more probable to become the monopoly in humanoid robots. If they become a monopoly in energy production, then they become a monopoly in all these other things. And so that's just, for that company, it's just the amazing thing to me that whether, you could attribute it all to Elon, you could attribute it to the people there, but really I think it's just a feedback loop that they had the vision. And so as they had the vision, all the dreamers and all the people that were working for passion joined, which means they had the better technology, the better technology, the better technology. And everyone hated them. Tesla stock was the most hated stock. We've talked about Judgment, Wall Street, all that before. But it's like this black hole of intellectual capital, let's say, in all of these industries. It's like you don't want to go work for the second best AI company. You don't want to go work for the second best, you want to go to Tesla because that's what's cool, that it's everything, and then which then feeds back better profit margins. It feedbacks in less debt required, which makes his financials better, so it's like this feedback loop, and it makes perfect sense because that's what we've seen in other tech monopolies. But I suppose my then flip side of that is that all technologies are just trying to drive the marginal cost of production down, including Tesla, including and especially Tesla. And so it's like, okay, I could own the equity of the stock, but like you're saying, everyone needs energy. Yes, everyone is going to eventually want a humanoid robot assistant. Yes, everyone's going to eventually drive an EV. Yes, but everyone needs money. And right now, because we don't have a good form of money, we are just putting money, we're putting our 401ks, we are putting our retirement portfolios, we are speculating in the stock, real estate, and gold markets. And so to me, and this is where I'd love to hear your allocation, or all that, how you justify this. But it's like, for me, even though I'm that bullish on this one company, this one security, this one stock, it's like with the monetary premium we've given it, I can't justify that when if Bitcoin did not exist, I think Tesla stock and maybe half a dozen other things out there would be like the go-to for me. But it's like, in light of Bitcoin, none of that makes sense anymore to me.
Yeah, I agree with you 100%. And that's why I'm still buying Bitcoin, even at today's prices, and not buying Tesla stock. Or, I'm a little bit extreme. So like, I'm not diversified. It's like Tesla stock and Bitcoin. So,
so can you clarify that you are not diversified in anything else, only Tesla and Bitcoin, or can you
cash,
clarify what you just said?
Tesla, Bitcoin, cash. Yeah.
That's it.
That's it. Yeah.
The best company, the best money, and the
Why would
best
I
fiat
why would
money.
I diversify? Yeah.
Yeah.
Why would I own the second best? I've owned other equities in the past, but I just high conviction. Um, but yeah, like I said, you when you go down the Bitcoin rabbit hole enough, you know, you compare these assets, and Tesla, in the end of the day, it's still a company, and there's just so many risks to a company. Like, Elon Musk going and wrestling Mark Zuckerberg or doing, and do you see that he's going to do
What?
an MMA? Yeah, Elon Musk he's supposed to do like an MMA fight with Mark Zuckerberg, and like as Tesla shareholder, you're like, why do you need to do this? Like, why would you risk yourself?
You're not
Or
kidding. Oh my goodness.
yeah,
Okay.
yeah, that was yeah, it was all
Wait,
over Twitter yesterday.
did Zuckerberg say yes?
Yeah, and Zuckerberg's he's a legit martial artist. I don't know what Elon Musk is thinking, but
Wow. Okay.
yeah,
That's
but
anyway, we're talking
a,
about risks to a company.
a risk to a company. There's one right
What
there.
if Elon gets hurt?
Yeah, what if
What hap-
Elon gets hurt?
I mean, hope I obviously don't hope that, whatever, but it's like, or Zuckerberg, the person's irrelevant. It's like if you're a Facebook shareholder or a Tesla shareholder, as small as that chance might be, it's like, what if they get hurt?
Yeah, exactly.
Sorry, I totally hijacked that there, but okay,
Absolutely.
that
There's
proves your
just
point.
there's just so many risks with equities. There's so many risks with anything. This is the contrarian view of a Bitcoiner, but in my opinion, owning Bitcoin is the least risky asset that I could own, and it's got the highest possible return. There's just so many less things that can go wrong with its completed project. It's just there, and if you're owning equities, like I said earlier, every other company is trying to take your margin and kill you. So there's this constant threat of competition, so many risks of the management of the company making a mistake, threats of changes in the industry. Maybe your product doesn't align with what the customer wants or something like that. Um, so, in my Bitcoiner opinion, I just think that Bitcoin is just why would I need to hold other things? Maybe cash to buy stuff, but uh, uh, it's a volatile asset, but people get the volatility of it mistaken with what's going on under the hood, and whether the price is $69,000 or $15,000, nothing changed. The protocol was the same. It's just the market price. The exchange rate for U.S. dollars changes constantly, but
And the policy of the dollars changes constantly. The
yeah,
reason Bitcoin has crashed in the last couple of years is because the Federal Reserve has made dollars a lot tighter. The Federal Reserve changed their monetary policy to the tightest monetary policy like ever in modern American history, and Bitcoin only went down to $15,000.
pretty well. Yeah,
It's already doubled off that. And even though the Fed has barely slowed down their tightening, and Bitcoin's already doubled. It's
yeah,
like what it's like I explain it to people with a metaphor, and you'll love this with your engineering background. Perhaps you heard me say it, but it's like you have one person on a ship, you have another person on another ship. One of the two ships is sinking. They both see the volatility. There's volatility between the two ships, because if I'm looking at you, I have to change my telescope, and they were looking at me, change their telescope. There's volatility either way. It's just a matter of what's your what's your frame of reference. It's like if you're
yeah,
on the ship that's floating, well, the
yeah,
other one you just see it going down forever until it submerges, and if you're on the one that submerges, you're looking up, and it's just going up and up, and you think it's going up, and it's going to become a plane, and you're like, oh,
yeah,
well, that ship can't become a plane. Ships never become planes. Ships never go up forever. And you're saying that from your ship that's sinking, and that's why you think that. Anyway,
yeah,
that's my silly
yeah,
metaphor.
the outside perspective.
Yeah,
Yeah,
yeah.
the total addressable market of Bitcoin is just it's too compelling, and it's too, in my opinion, likely to happen. You know, it's the market's too big, and the things that can go wrong are so much less than owning any equity. This also applies to other asset classes. Real estate, you might buy a piece of real estate and something bad happens. Maybe you get like a bad governor or somebody, and then your tenant can't run his business there anymore, and you're not making income from your lease, or whatever. In gold, maybe there's a discovery of a huge asteroid mine or something, or I don't know, increase the
Yeah.
supply of gold.
We
Everything
just
has
don't
these,
know. Yeah.
everything has higher, uh, more threats to it, and also a smaller total addressable market. So that's why I would allocate so heavily to Bitcoin. And I'm sure in the future it'll change for me personally, possibly. When I get older, maybe I want to diversify my assets just for less volatility. But for now, um, like Bitcoin is pretty much it. It's where I would put my money.
Yeah, I think that's an interesting point because on one hand, perhaps you diversify more as you get older because you become lower risk as you get older, your income goes down. But simultaneously, I think perhaps by that time that you are older, over the next, say, 10, 20, 30 years, I think Bitcoin's risk goes down the larger it grows. I think that's pretty clear at this point. Versus pretty much everything else, the larger it grows, the higher risk it becomes to a certain degree. The bigger Tesla, the company, grows, the more incentive there is for other people to outcompete them and destroy the margins.
Yeah,
The
yeah,
larger gold the asset grows in value, the higher the incentive for someone to create a discovery and force it back down. But Bitcoin's different in that regard. It's the only thing like it, as far as I can tell, that becomes lower risk the larger it grows. But
yeah,
my point being that on one hand, yeah, perhaps maybe you'll diversify as you get older and more risk averse, let's say. But what if by that point, if you're saying already the Bitcoin is lower risk than everything else, what if it's 100 times lower risk than everything else by the time you get
yeah,
older? So perhaps that
sure.
offsets that incentive to concentrate
Whatever.
heavier in Bitcoin offsets your
Yeah.
incentive to diversify.
You're just holding perfect money at that point.
Yeah, what's the point?
Yeah. Yeah, right. Yeah, it's true. No, I haven't thought it through all the way out. We'll see
Well,
what
yeah,
happens
and
when I
who
get
knows?
there.
Who knows?
Yeah.
Who knows? Yeah, yeah. We'll see how it gets there. And it's funny because there are people like us that are already there that are very heavy in Bitcoin. Michael Saylor obviously is the most famous or infamous person on traditional Wall Street. He's gone completely against the grain with his peers, his other billionaires and CEOs and managers of businesses and public stock, that he sold his stock as fast as he could to buy Bitcoin, and he raised as much debt as he possibly could to buy Bitcoin. And his company is essentially the only company that is keeping up with the rate of Bitcoin's Bitcoin's
Yeah.
appreciation.
Yeah. I think they'll
Yes.
outperform. I think they'll most likely outperform
Yeah.
Bitcoin. I mean, it's
Well,
just like the model of it. They're it's like a machine that generates additional Bitcoins that you can own it. You can own a piece of it. So they have the software
yeah.
business. They're just desaying in a Bitcoin, and there's no management fee. Yeah, it's just a better, like, it'll probably, I wouldn't hold it over spot Bitcoin, but it'll probably outperform spot Bitcoin, I would think,
At least for a
over time.
time. Here's
Yeah.
something interesting to that exact point you just brought up. But this is a chart of company
Hmm.
stocks versus Bitcoin. So Bitcoin is the orange line there, obviously. This is just goes back to 2016. But you can see the S&P 500, so the total stock index, real estate, gold. So this here we can see, again, if we're using the ship metaphor, one sinking ship and the other sinking ships, we have Bitcoin that stays flat. One Bitcoin is equal to one Bitcoin. And we have all these other assets. So you were talking a minute ago about US real estate, about gold, and the S&P 500, which for those who don't know, hopefully everyone is that's a stock index here United States. Then you have other currencies. You have the peso and the lira, and you can see that they are all trending down against Bitcoin. And as a function of the volatility of the US dollar and the dollar's monetary policy, all these things are trending downward with time. So now we're at
Hmm.
2019. We're about to come up on the COVID scare or COVID crash, let's say, early 2020, February, March. There it was in March. And then from there, we can see, let's skip ahead a little bit. Everything's continued to go down against Bitcoin. And so then
Yeah.
people have trouble viewing it this way, but like this right here, if you can see my cursor, I don't know if you can or not,
Yeah. Yeah.
but like that is the quote unquote top of Bitcoin right now.
Yeah.
And so people look at that, they're like, oh, well, Bitcoin's crashed.
Yeah.
Whereas my vantage point is if you just extend your time horizon, the trend seems a little bit different than what we're told. But anyway, I originally wanted to find this because you were mentioning stocks, MicroStrategy stock. If you look here, MicroStrategy revealed his plan to buy Bitcoin in July of 2020, right here with this arrow is MicroStrategy is the red stock here. And I don't, we were talking a minute ago, I don't think you've seen this chart, but it goes exactly with what you just said, that MicroStrategy actually from that arrow onwards has been more volatile in Bitcoin terms, has been volatile in Bitcoin terms, but it's roughly held its value compared to
Yeah,
all these other stocks. You have Tesla stock, which we've been talking about a lot. We have Apple, Google, the S&P 500 in this purple line here. And then the US dollar, of course, has lost the most value here. But anyway, I found that interesting that MicroStrategy up till this point was going roughly the same, was falling down roughly the same rate as other equities, other stocks, and then it has been basically flat
yeah,
since then. So anyway, that just goes to prove exactly what you were saying. But yeah.
yeah. That'll be interesting to watch that whole story play out, because this is MicroStrategy I view as this kind of like a experiment and almost like financial engineering. It's like they created this hybrid asset that is like is basically a proxy for Bitcoin, but also has a software business attached.
Yeah.
Um, yeah, it's really cool. I would own that. I would buy MicroStrategy stock over. I tweeted this. I would buy it over Bitcoin ETF. Everybody's excited about the ETF, but I'm still more excited about MicroStrategy. There's no fees for it. It's a great proxy uh, for Bitcoin. Um, yeah, it should outperform. Yeah,
Yeah, but ultimately at the end of the day, MicroStrategy, ETF or otherwise, we're trusting humans, and the outperformance
yeah,
is a function of the humans. And
yeah,
so if you trust some humans better than others, you might be able to outperform Bitcoin, but it's probably not going to be a lot, maybe, well, probably not a lot. Probably.
yeah. And that's
Yeah.
true. I should caveat that and say, as long as somebody as crazy as Michael Saylor is running the company, it'll outperform. But if different management takes over and they decide that the Bitcoin strategy is not for them anymore, it's a risk. So spot BTC definitely over MicroStrategy, but
Yeah. Yeah.
just a thought about that stock.
Yeah. That even if you're buying Bitcoin indirectly via buying a stock that holds Bitcoin, you're still not owning the same thing. It's like owning
Yeah,
a company that sells gold or a company that holds gold versus the gold itself in your own safe.
yeah,
It's not the downside risks are significantly higher when you have a company in between the asset
yeah.
and you. So anyway, I know we've taken a lot of your time. As we wrap up here, I have a couple more questions. One being, you said you used to own those two things. Well, actually, an interesting way to view it is that you own Tesla, which let's say you view as the best company. Then you own Bitcoin, which let's say is the best money or the best commodity. And then you own cash, which is the best fiat currency. So it's like you're diversified in the three things that there is no second best, let's say. And for you personally, obviously this is not financial advice to people, and probably most people won't have the conviction you do because they've not put in the same time or had the same gains that you have. But what is that allocation, if you don't mind saying? What percent is cash? What percent's Tesla? What percent's Bitcoin?
Um, so I don't know how much Bitcoin I own. Actually don't know the exact number. It's probably like 70% Bitcoin, uh, 15% cash, or sorry, 15% Tesla, and whatever the rest is of that. What are we at?
Wow. So
10%, 10%, 10, 15% cash, something like that. I don't know. I don't I
you
don't
don't check the price. Yeah.
I don't track. Yeah, I don't really track that metric. So
That's I
model.
we were talking earlier about judgment, and I think a good sign of when you know that it's just conviction and not obsession, let's say, is when you stop checking the price. So perhaps that's a good
Yeah,
thing that you don't know off the top of your head.
yeah,
Yeah, but okay, so roughly your Bitcoin position is 3 or 4 times larger than your Tesla position.
yeah,
Wow.
something like that. Yeah,
Yeah, yeah, I think that's
it's
great.
grown. It's shot up quite a bit. So is the Tesla,
Well,
but
yeah, but the
I've
Bitcoin has been
invested.
rising faster. Yeah.
Yeah, yeah, and I put more into Tesla over the years than I did. Or sorry, I put more into Bitcoin over the years than I did Tesla. So
Yeah.
just waiting based off conviction. So
Yeah. Well, we'll keep waiting for conviction. You mentioned 20 million per Bitcoin earlier, and I know obviously given everything we just said, we think 20 million is probably very, very way too low for Bitcoin. But you're saying 20 million is more likely than zero. Could you touch on that?
Yeah. So I'm looking at my little charts here.
Yeah,
Um,
yeah, pull it up or whatever.
so can I
And
screen
the
share?
funny thing is when you explain Bitcoin to people and they aren't thinking in terms of deflation, technology, so, 20 million sounds absurd. Like, oh, there's not enough money in the world and blah blah blah. To them, it seems so unlikely. But to us that are kind of thinking in those terms with a longer time horizon and trying to think of Bitcoin as repricing current assets and current debts and also future technology, to at least to me, it makes perfect sense.
Mhm.
I think 20 million, I think personally, I think Bitcoin will be 20 million US and the majority of the world will still not have bought Bitcoin. Like I think 20 million
Yeah.
is not eventually we'll get there. I think 20 million is a stepping stone of getting from here to there, just because I think the math is that simple. So did you find the article you're looking for?
I'm trying to figure out how to share my screen now.
Oh, it's at the bottom. It's at the bottom, share screen.
I do not see a share screens.
Okay. Here's something to emphasize what I just said. So this person said, I've been buying $10, 10 US worth of Bitcoin a day for 3 months, but they only own 3.5% of the Bitcoin. So 3,500,000 sats. And they're trying. And someone tagged me asking me to explain why. And this is what I said, that there are less than 2 million Bitcoin left on exchanges, which is true. We can verify that. And then you have BlackRock filing for the ETF, Fidelity, and others that are trying to come after Bitcoin. You have the billionaires, thousands of billionaires. You have tens of thousands of centimillionaires, hundreds of thousands decamillionaires, and millions of millionaires. And then you have nations, all of which can print their own currencies, an infinite amount of their own currencies. And so it's like assuming they buy zero Bitcoin, not zero Bitcoin, not one, then that's 40,000 sats per human adult today, or
Yeah.
40, 0.0004 for Bitcoin. And so 3.5% of a Bitcoin is 0.035 Bitcoin. So like 3.5% of the Bitcoin easily could be like 1,000 times more than what the average person in the future would be able to buy. And that's only 5 billion adult humans. That's not including the additional 2 billion adult humans that will age and be born in the next couple of decades. It doesn't include the
Yeah.
autonomous robots. That doesn't include the AI. And that doesn't
Yeah.
include that the average prosperity for a person in 30 years will probably be significantly higher than the average prosperity of a person today. So it's like at a certain point, it's just absurd.
Yeah.
But yeah,
It,
to clarify, for me, 20 million is nothing.
stepping
But
stone.
that's the number you said. So I want you to finish on
I
that point.
mentioned the number $20 million. That's not some sense of, so I'm of the belief that I don't think it's reasonable to put a price target on Bitcoin. There is no price target you can put on it. It's infinity. The purchasing power of Bitcoin will go up forever. So I say $20 million. I have like this chart where it's like that's like 50% of current global assets, and factoring in monetary inflation, 20 so 50% of global assets, current global assets, put it at $20 million in my estimates, and factoring in inflation, it wouldn't even need to capture 50% of global assets to reach $20 million. So 20 million is a stepping stone, but in my opinion, up and forever, it doesn't make sense to put a price target on it because there is no limit on the invention of it's the only perfectly reliably truthfully scarce 100% scarce asset that humanity knows. So that asset will accrue value relative to everything else forever. There's no point in putting a price target on it. But you can say 20 million, but that's a stepping stone. $20 million, who cares? It'll go up forever, and it'll probably go up pretty quickly too.
Yeah, yeah. Well, time recording Bitcoin's just over $30,000 US, so it's got a ways to go. And I think to finish off here, I think something important to say is that it's not just about Bitcoin going up; it's about everything else coming down, which ultimately is a good thing. Food prices come down as a function of Bitcoin going up. House prices and housing becomes more affordable as Bitcoin goes up, and so that's a beautiful thing. That's the exciting thing that everything gets cheaper. Everything the prosperity gains of society are actually reflected in the base layer money, which I know this is something you said earlier that's a concern of yours. How do we make sure that the productivity gains from all these forms of technology are being distributed evenly? I would argue that the best way to do that is have this form of money that can't be manipulated, because then you can't
Yeah.
manipulate those prosperity gains to one person over another
Yeah.
person. And
Yeah.
so, yeah, I mean, I guess that's why I always say get off zero to people, because it's like
Exactly.
once you understand Bitcoin, you understand, oh, Bitcoin's going to skyrocket. It's like, no, the more accurate thing is that everything else is about to collapse because
Yeah.
all these assets have been propped up for decades with fake money and artificial growth. And then we'll also have real growth on top of that, which is an even bigger deal than the collapse of fake money. So yeah, do you have a little tidbit to encourage people to get off zero, or and then tell
Yeah.
us where we can find you?
Yeah, sure. You cut out for a
Oh,
small bit there, so
yeah,
if I didn't catch everything you said, I'm sorry. But yeah, yeah, I encourage everybody to study Bitcoin. If you're watching this, um, study Bitcoin as much as you can. There's no reason to have a 0% allocation to it. Um, there's apps where you can get free Bitcoin, literally, like the Lolly app or the Fold app. They have like this daily spin and treasure chest you can press. So you can get some free satoshis that way. But so therefore, I think there's no excuse to have literally zero Bitcoin. At least play around with it, learn what you can. So yeah, you can find me on Twitter. I'm at the powerful HRV. Um, maybe I should. That's my. I've had that name forever. Maybe I should change it to
well,
something
your
more.
argument's very powerful, so it
Yeah,
still holds
I,
true.
I still like it. Yeah. So
Yeah.
at the powerful HRV on Twitter. I tweet a lot. I like to tweet charts and things like that. So
Yeah.
um,
Good stuff.
yeah.
Well, thank you, Mark.
Thanks for
Really,
having me,
really
Luke.
enjoyed this. Yeah.
Yeah, I really
Thank
appreciate
you.
it. Thank you.